In this video, I'll go through Work Together Problem 6-1 from page 177 in your Century 21 Accounting Advanced textbook. So this is on journalizing entries to write off uncollectible accounts using the direct write-off method. Okay, so not very many times can a business use the direct write-off method. Most of the time you can't, but this is how you would do it if you could. So, Winters Incorporated uses the direct write-off method of recording uncollectible accounts expense. A general journal and a cash receipts journal are provided in the working papers. They're here in this Google Sheet. Use page 2 of the general journal and page 4 of the cash receipts journal. Source documents are abbreviated as follows: memorandums M, receipts R. Your instructor will guide you through the following examples. Okay, so our first one, February 3rd, we wrote off Loper Company's past due account as uncollectible, $115.81, memorandum number 33. So we're in our general journal here, February the 3rd. This is going to be uncollectible accounts expense. And it told us it was memorandum 33. And the amount was $115.81. Okay. So the credit is going to be to the accounts receivable Loper Company because we've got to reduce that balance. We don't think they're going to pay, right? We're writing off their past due account as uncollectible. They're not going to pay us. So they did have a balance of $115.81. We're just going to cross that out and expense it to uncollectible accounts expense. Okay, so that one's done. Same thing, April 24th. And we're going to write off Polk Supply's past due account as uncollectible. So again, uncollectible accounts expense, and this one is memorandum 42, and the amount $95. Okay, and the credit is accounts receivable Polk Supply, and that one is finished. Of course, you would post those in your general ledger, but we're not going to do that for the purpose of this problem. All right, the next one is a little different. May the 14th, we received cash in full payment of Loper Company's account previously written off as uncollectible, right? Up here on February 3rd, we wrote it off. We said we're not going to get any money from them, but now here on May 14th, they sent us money, and we're not going to turn that away. So if we received cash in full payment, we need to reopen the account. So we'll do that here in the general journal so that we can then collect from them, okay? So May the 14th, we have accounts receivable, Loper Company. We'll debit that to recreate it, reopen it. And then we are just going to reduce the uncollectible accounts expense that we charged right up here. So basically we just did a reversal of this entry, okay? So $115.81, $115.81, and what was our memorandum number? 51. So notice there's both a memorandum and a receipt number. That tells us the next step is going to go to our cash receipts journal. But this was memorandum 51. So the rest of this one will need to go to our other tab. So now that I'm over here on our cash receipts journal, I can enter the second part of the entry, May the 14th. We received cash in full from Loper Company, and this was document number receipt 221, right? Because now we're in the cash receipts journal, our document number is the receipt. General journal, we use the memorandum. Okay, so this is a credit to accounts receivable of $115.81 and a cash debit of $115.81. And of course, we would post this later at the end after we've done all of our accounts receivables, all of our cash debits. Okay, and we would post it individually to Loper Company. That one's done. Now we've got to do June the 8th. Same sort of deal. We'll go back to our general journal and reopen Polk Supply, because they paid in full even though we'd written them off. So uncollectible accounts expense will be our credit. We're just reversing this entry from April the 24th, right? So we have a new memorandum number, 64, and then the amount is $95. Okay, so now we'll go back to our other journal, our cash receipts journal, and June the 8th, we received cash from Polk Supply, receipt number 259, and the amount was $95. Okay. That is all there is to it with writing off uncollectible accounts using the direct write-off method, and then, of course, collecting cash when they pay later. So, this is your work together. You're on your own as in a separate workbook. Good luck.